Hey, welcome to another 25 minutes of the only weekend business program, Capital Market, right here on Channels Television. I'm Ladi Williams. First off, let's get a check on major global markets we track, starting with the U.S. See, major indexes in the U.S. traded down on Friday with the S&P 500 index. That's about 0.11%, 38,798 points. We see the NASDAQ, there's 17,133 points, while the S&P, that was also down. So it's all red in the U.S. European stocks closed lower, though, as investors digested fresh U.S. jobs data out in the U.S. And the European Central Bank's latest interest rate commentary. See it down, all FTSE 100, 0.48%. Same with the CAC 40 in France. And while the DAX, German DAX, was down 0.51% in Europe. So red was the color also in Europe. To Asia now, Asia Pacific stocks were mixed. On Friday, as investors looked at economic data from China. And we see Japan's holding household spending numbers too. That also shaped investor sentiment about the Shanghai Composite. That was marginally up 0.08%. Or the Hang Seng Index, that was down 0.59% on Friday. And back here, we see the NASD OTC securities markets performance ended the week negative as the index was down 3.57% week to date. At the same time, the volume of securities traded this week were in the green, about 6.79 million, while value was down at 723 million naira, while number of deals carried out was 236. Top advances for the week are Central Securities Clearing System, PLC, Afriland Properties, PLC, while the top decliners are Geofluids, PLC, and Aradol Holdings, PLC. And some company news now. Notoria Chemical Industries, PLC, has recently experienced a notable shift in its leadership, marked by the departure of 7 non-executive directors and Group Deputy Managing Director, effective as of May 31st, 2024. The reins of the chairman position have been handed over to Thomas Etu, formerly the chairman of Unity Bank and Veritas Capital Assurance. He succeeds Femi Agbaje, who notably is the elder sibling of Shengo Agbaje, in the leading company's board. In a recent development, the Senate has officially endorsed Emamotimi Agama as the Director General of the Securities and Exchange Commission, alongside 3 other nominees appointed as executive commissioners. The confirmation came subsequent to the presentation of the Committee on Capital Markets report, affirming that the nominees fulfilled all prerequisites and demonstrated exceptional qualifications for their respective roles. Additionally, the Senate greenlit the appointment of Frana Chukwugo as the executive commissioner responsible for legal and enforcement, while Mr. Bola Jamale assumes the position of Executive Commissioner overseeing operations, and Mrs. Samia Usman takes charge as the Executive Commissioner handling corporate services. All right, to our story, we see Flour Mills Nigeria has published its audited financial statement for the fiscal year ending March 31st, 2024, reporting a profit after tax of 3.54 billion. This profit represents an 88% decline when compared to the 29.5 billion recorded in the previous fiscal year. During the fiscal year, the group posted a pre-tax loss of 236.7 million, marking a 101% decline from the 39.8 billion pre-tax profit posted in the 2022-2023 fiscal year. And now we see the Independent Project Monitoring Company has launched its first environmental, social, and governance ratings for banking and insurance companies. The essence is to encourage more positive actions towards ESG in the banking and insurance sectors. According to the chairman of IPMC, Mr. Robert, the evolution of ESG is to reflect a broader transformation in the financial industry. Take a listen.
Working with regulators and stakeholders in the financial sector, IPMC has called this meeting to emphasize the need to adopt more ESG practices into daily operations. Their focus for this initial rating meeting are the banks and insurance companies, and it's a consensus that this move would bring benefit to the sector and beyond.
Research has increasingly shown that integrating ESG factors into investment and business decision leads to value. Sustainable finance is not about sacrificing returns. It's about recognizing long-term profitability and also recognizing that this is intricately linked to sustainability of their businesses. Investors are increasingly demanding that companies demonstrate their commitment to ESG principles, and those that do so are rapidly reaping the rewards.
Clergyman and former managing partner at SIAO, Mr. Ito Ighodalo, believes that more value would be added if intentional guidelines and regulation is enforced.
Along the line, there might be some legislation that will be put in place through the National Assembly or whatever it is that makes it compulsory for people to have a minimum level of ESG engagement or sustainability, ESG reporting and things like that. You know, a lot of the things that insurance companies do right now is because NICOM forces them to do it. So the regulator too has a lot to play in upping up its game very quickly and ensuring that everybody knows where they're going.
In rating top performance in the adoption of ESG by banks, IPMC recognizes Zenith, Access, Stanbic IBTC, Fidelity and UBA, while insurance had AXA Mansard, Custodian and Allied Alliance Nigeria, and Custodian Life Assurance.
I want to make sure that there is adequate governance. With adequate governance, we are able to ensure that there is sustained processes in our production and in our business, such that we produce responsibly, we use, we use the resources responsibly, we deal with our staff responsibly, then we deal with ourselves responsibly.
IPMC believes that workshops like this would encourage sustainability in doing businesses as well as harnessing human capital.
All right, let's get a review of the NGX performance for the week. Joining us for this conversation is Mr. Tajuddin Ibrahim, is Head of Research and Strategy at Chapel Hill Denham. Great to have you on the show.
Thank you for having me on.
So it's been quite a week right here. We did have industrial action for about 2 days, this week. And I'd like to get your perspective on how this impacted the market and investor sentiment this week.
So the strike was negative on the market, considering that it was negative on the economy. And what the strike also implies is that companies generally would have incurred much higher costs in terms of the cost of electricity cost, because electricity was basically cut off during this strike, and the expectation was that companies would have recorded much higher expenses for those 1 or 2 days that light was or let me say power was off. Naturally speaking, we know that in Nigeria, most companies, even when there was no disruption to electricity supply, most companies depend on diesel to power their generating set, and some that can really work on solar system are doing so. So it was broadly negative on the economy, and it also implied a negative effect on the companies that are listed on the exchange. But the expectation is that that will be a one-off, and there would be no repeat of such an industrial action anytime soon. Broadly speaking, it was negative.
Right, and definitely we're still having to negotiate at this time. We're seeing private sector and the federal government looking at 62,000 naira minimum wage, but we see Labour asking for 250,000 naira. Talk to me about how these numbers, how it would impact listed companies on the NGX.
So what this basically means for listed companies on the NGX is that it will lead to higher staff costs, because once we have the minimum wage being increased to either the 62,000 or a number that is much higher than that, what it implies is that average worker for all the listed companies on the exchange, would have to earn more, because when it becomes a law that this is the minimum that employers can pay to their workers, it will not reflect just on the civil service alone. It will also reflect on the entire working population. So the private sector will be impacted by that, and they would have to increase salaries, and that means higher staff costs for them. That may have some impact on profitability if productivity does not increase in line or much more than the salary increases that are implemented by listed companies. And I think that will be the direction in terms of expectation. And my sense also is that listed companies have their ways of ensuring that there is an improvement in productivity whenever whenever there is an increase in salaries or payments to staff. So I think there is not much concern around that, and this is an indication that the government can learn from the private sector, in my view.
Right. So we've had strike action. We also saw the revocation of heritage banking license. How do you say the market absorbed both of these big news?
I think the market saw that as a negative news. Just the way I see it, I think it is negative because it sends some form of signal to the market in terms of how strong are the other banks, particularly the tier 3 banks, those that have much lower deposit base, much lower loans and advances. So it is an indication, that investors, will be worried and around what bank is next. So I reckon that, before, the revocation of the license by the CBN, some of the exposure that some of these banks had with Heritage Bank, those exposures, because some of them were lucky enough to have, called back their money from Heritage Bank. But I think, we could still have, some banks that still have exposure to Heritage Bank. My sense is that over time, they would have to make provisions. What is the size of that provision for now? We do not know, but, broadly speaking, it is negative. The only positive thing in there is that, the CBN intervened, in what I can say, an early intervention, just to be sure that, they have tried enough to keep the bank standing, but, they just had to let go. And I think, it sends some form of signal that the CBN should work more around ensuring that we have sustained stability of the banking sector. It is not enough to tell the public that the other banks are sound. What I believe is sufficient is for them to increase their supervision roles in those banks, whether listed bank or non-listed banks. Those are my views.
Do you think the CBN shouldn't have let this liquidation happen? They should have just saved the bank, because at the end of the day, we know most of the central bankers don't want to let any bank fail. Okay. All right, I think we're having some internet glitches there, but definitely the issue is still unfolding right now. We'll take a quick break. When we come back, we'll find out if most of those tier 3 banks are out of the woods yet, because we did see sell-offs with most of those stocks. That's in a moment. Do stay with us. Welcome back. Well, to other companies now, we see Presco, that's Nigeria's oil company, is presently in talks to acquire 100% equity stake in the Ghanaian Oil Palm Development Company, that's GOPDC. The acquisition is projected to amount to $124.9 million with a purchase of 70.58 million ordinary shares of GOPDC at a price of $1.77 per share, according to a corporate disclosure by Presco. Presco will make an initial deposit of about $64.96 million, with the remaining balance to be settled in the future. And definitely looking at the market performance this week, about 0.08% drop. Definitely we've seen the impact of industrial action on that market. We also saw how the recent liquidation of Heritage Bank there actually impacted Tier 3 banks. We saw sell-offs with the likes of Unity Bank on the NGX. So we did see a big reaction there from investors. So we had 99,221 points. That's what we have for the all-share index for the close of this week. So it's still below the 100,000 psychological level at this time. Equity cap, 56.12 trillion. But we see activity for the week was quite subdued, with value 31.30 billion. That was value of stocks traded this week, but volume was much higher than the previous week. Deals, 37,765. Those are the number of deals that we have for the four top trades. Fidelity Bank PLC, Access Holding PLC, Veritas Capital Assurance PLC. Those were the top trades for this week. So definitely going into next week, investors will be wondering what's going to come next, because we also have inflation numbers coming. That's for next week. What's the inflation going to be? Definitely, and that will impact the markets. We've seen how the interest rates have risen and the fixed income market looking more attractive to investors. So a lot to unpack next week, and all of that's going to definitely impact the equities market and the fixed income market going into next week. So, and definitely what's going to happen next with interest rates. How much wiggle room does the central bank have at this time? Because we still have inflation at all-time highs. We still have food inflation also really high, and all of these will definitely play into investor sentiment in the market. But we'll take a quick break now. When we come back, we're going to analyze more there, find out what's going to happen for trade next week. Definitely so much to unpack. That's in a moment. Just stay with us. Welcome back. Let's head straight to the conversation. Now we have Mr. Tajuddin Ibrahim still with us, Head of Research and Strategy at Chapel Hill. Dan, great to have you, Mr. Tajuddin. So we see confirmation there for the new SEC Director General, Momotomi Agama. How are market participants seeing this? What are they expecting for his leadership?
Okay, so I think the broad expectation is around an improvement in efficiency. At the SEC, particularly from the area of transactions that naturally should go to the market or come to the market very quickly. The turnaround time in terms of the review of documents from market players, from issuing houses, the turnaround time, we expect to improve, now that we have, a new DG. My sense also is that it will bring to the market a lot of improvement in supervision. Supervision, we believe, is very important in the market. Just so that we ensure that everybody is playing to the rules and regulations of the market. So broadly speaking, the market was, it was positive in terms of the news flow. And my expectation is that we will see an improvement in turnaround time in terms of how rapidly the SEC is able to review documents that are sent to Abuja by issuing houses. With that, we will have a lot more transactions happening in the market. We will also have more products introduced to the market, and those products review processes, to my mind, will come as efficiently as they can, and we should also see an improvement in terms of product review, in that regard. When we have that, we will have a much broader and much more robust, capital market in terms of, product issuances by issuing houses, and also in terms of the ability of the investors to choose a lot of, products that they want to invest in terms of asset class investment. I think those are the positive expectations that we should expect going forward.
Right, and talking about expectations, the fresh trading week next week, what are you seeing?
So for the trading week next week, I think it is very important for the government to deal, positively with the labor to ensure that, the meetings that they're having with labor, yield, positive, results. If we should have negative results and then there is another, round of strike, it will be negative, for the economy. And I see the market, reacting negatively in that regard. That is number one. Number two is that the performance of the equities market, for instance, in the past sort of, few weeks have been broadly negative. And I sense that, next week could be a week that, more investors will cherry pick in the market to take advantage of low valuation ratios that we have in the market. I think those are some sort of broad expectations from the market and economic standpoint.
Right, and definitely we'll get inflation numbers sometime next week. Well, thank you so much for coming on the show today, Mr. Tajuddin Ibrahim, Head of Research and Strategy at Chapel Hill Denham. Thank you so much.
Thank you for having me.
All right, that's the show now for the first trading week of June. Definitely, we're looking out for how investments and investor sentiment shapes for this month of June. Thank you so much for watching. I'm Ladi Williams. Remember, if you must sell, find the top. Bye-bye.